Money Radio, thank you for joining us today. And joining us now, Laura Bramnick from TalkRealEstateAZ.com. Laura is an attorney and also a real estate agent. Great combination. She's also a consumer advocate. Laura holds an active Arizona real estate license. She's been an investor over the years. She's also licensed through the State Bar of Arizona and specializes in real estate. More info, TalkRealEstateAZ.com is the website, or you can call 480-624-2705. That's Laura's phone, and she answers her own phone. 480-624-2705. Hi, Laura.
Hi, Sinclair.
Today, let's talk about reverse mortgages.
Yes, they've become fairly popular as the baby boomers get older.
Yeah, I hear the ads from Henry Winkler all the time.
Oh, I know, that's true.
Yeah, but this is something you really need to understand before you sign on the dotted line.
Yeah, there's a lot of paperwork, and it's very confusing. And they're also, the upfront fees are very high. So you want to make sure that it makes sense for you. Doesn't, just because the fees are high doesn't mean you shouldn't do it. Because it's better than a home equity line of credit because you don't have to make monthly payments.
Okay.
You know, because a lot of people use this because they have medical bills or they need supplemental income to their Social Security.
Sure.
And so you don't want to be paying money out. And that's why this type of mortgage was developed.
But it needs to be under the right circumstances, and you have to be, what, age 62 before you can even think about it?
Yes, you have to be 62 or older. You have to either own your home outright or have a relatively low mortgage balance.
Okay.
Because they limit the amount of equity you can borrow. So if you own your home outright, and let's say it's worth $300,000, they don't let you borrow $300,000. They usually let you borrow about 60 to 65% of the equity.
All right.
And that depends also on your age at the time you're borrowing it, because if you get a reverse mortgage when you're 62, the actuarial tables say that you're going to live so many years.
Right.
You know, and you're going to live a lot longer, most likely, than if you get the reverse mortgage when you're 82. And so you can usually get more money out the older you are.
Okay, sure, that makes sense. I get it.
So you wanna understand what you can take out and if you should wait. You know, this is a complicated financial calculation.
And there are different ways to take money out. You could do it on a monthly basis or as a lump sum?
Yeah, you can do it on a monthly basis. You can do it on a lump sum. You can also do it as a line of credit, which means you only take what you need.
All right.
So there are different ways to do it, and you basically are using the equity in your home as cash. And what you want to be careful of, a lot of people ran into problems where they maybe had a big medical bill or some other big expense, and they used a big lump of their reverse mortgage, and then they didn't have money to pay their property taxes or homeowners insurance. So the lender, most reverse mortgages are insured by FHA now. They used to be, there was conventional and FHA, but the vast majority now, after the market crash and things like that, are insured by FHA.
Right.
And FHA will determine if you can afford to pay the property taxes and homeowners insurance. And if you can't, and if you have enough equity, they'll actually set aside that money, like in an escrow account for you.
All right.
Because they want to make sure that they're not going to be caught having to pay these to protect their collateral.
But once you do a reverse mortgage, they can't just kick you out of your home.
They cannot kick you out of your home. If you have to go to the hospital for an extended period of time, or if you end up, let's say, in rehab or in a nursing home, you can be gone 1 year before they will say, okay, you're not living in your home anymore. That's the measuring tool, 1 year.
Now, you mentioned the upfront fees, so this is not a short-term proposition. But what if something happens a year or two down the road and you need to move?
Yeah, well, they say that if you plan to move in 2 to 3 years, that it's probably not cost effective. But you know, emergencies happen.
Right.
Just like anything else. There's a lot of fees if you purchase a home or refinance that you don't get back if something happens and you have to move. So if you have to move, then you basically have to pay the lender back. And most people, if they're moving, sell the property and use the proceeds to pay the lender. You know, just like a conventional loan would be. If you don't have the money to pay the lender, let's say your property's underwater, and I am still seeing that.
Mm-hmm.
And if your property's underwater, because even though maybe you've only borrowed 60 or 65% of the equity, a lot of properties in the 2005 time are way, you know, they lost more than half their value.
And haven't recovered all
Haven't recovered. So the good news is that reverse mortgages are non-recourse.
Okay.
Which means the lender can take the property, but they can't pursue you for any deficiency. So that is, as you get older, that's very comforting.
Next question, you mentioned age 62 or older, but what about a married couple where one is old enough and the other is a couple of years younger than that?
Well, in that case, it's the older person that's the only one on the loan. And that was a big problem because when that older person died, they were foreclosing on the property, and basically the younger spouse was being kicked out. And so there was a big backlash against that.
Yeah.
And so there's been changes in the way FHA in particular deals with this. They basically will they do what they call an assignment, which means that they pay the lender off and then they take over the loan. But the good news is that the younger spouse gets to stay in the home.
I imagine, though, that there could be some complications with a younger spouse not on the reverse mortgage. Also, if someone passes on, maybe a single person passes on, and the property is passed through inheritance, how to really deal with that and get the most out of it when there has been a reverse mortgage.
Yeah, inheritance is always a big issue because there's usually a lag time between the time the person dies and the time that the person in charge of the estate, it can be a trustee or an executor or administrator, gets a hold of the money. And so it's not unusual for missed mortgage payments, and then the lender gets aggressive. So you really need to have a good attorney. I do work with a lot of estate attorneys who run into a problem where they don't have a lot of experience working with lenders like I do.
Yeah.
So I partner with them to help the client.
It's important to really understand what's going on with a reverse mortgage, understand how it might apply to you under different circumstances. And of course, if it's passed on as part of an inheritance, you can certainly help with all of these issues.
Yeah, because the lender will call the loan.
Yeah.
Even though there's technically no payments due, you know, because reverse mortgage, you don't have payments.
Yeah, right.
But it's, you know, you just want to make sure you understand what you can and cannot do, and don't let the lender steamroll you.
And to avoid being steamrolled, that's something Laura can help with.
I hope so. I sure can.
Laura Bramnick, 480-624-2705, 480-624-2705. That's Laura's phone number, or all the contact information and a lot of great information at talkrealestateaz.com. talkrealestateaz.com. As always, great info today. Thank you so much.
Thanks, Sinclair.